the difference between VA disability, military retirement, and the TSP withdrawals. Let's cash in.
Finance for the everyday millennial. Hard charging solutions. We provide an accelerant in the journey towards financial independence.
Welcome back to Cassian with Cassian, the financial forum for young professionals. Today, we continue our military money series with a look at some of the different sources of income that service members may be eligible for after their time in uniform is over. These include VA-sanctioned disability, your retirement pension, and your TSP withdrawals. Let me preface this discussion by saying that the purpose of this video is to share basic information, not to provide any specific legal or tax advice. For help with your personal financial situation, reach out to your unit's payroll office or seek the assistance of a licensed tax or legal professional in your state or home of record. Okay, let's get started. Most of us have two major concerns when it comes to the financial allotments or benefits that accrue from our military service. And these are, will I have to pay tax on that money? And what could take that money away? These are good questions to ask because as a retiree, your income will depend on the savings and benefits you earned during your career. For example, a Social Security recipient who has no paid employment will collect their full benefit every month. But if they take a job while on Social Security and they have not reached the full retirement age, their benefit can be reduced by $1 for every $2 they make once they earn $19,500 in income. A Social Security recipient who earns $25,000 in a year will see their benefit reduced by over $2,700 simply because they continue to work. And to add insult to injury, that worker will still have to pay Social Security taxes on the income they earn, even while their own benefits are curtailed. The good news for military members is that your retirement pay will not be reduced if you continue to work after you retire from the military service. And this makes sense because active duty members who joined service in their early 20s will be eligible to retire in their 40s, which are the prime earning years. You can retire from the service in June and begin a new career outside the military in July without any impact whatsoever to your retirement pay. However, you'll need to remember that your military retirement does count as taxable income. At the end of the year, you'll receive a form called a 1099-R, detailing the taxable retirement pay you earned and the amount of income tax withheld. Your retirement, along with any other income forms, jobs, investments, interest, property sales, or other sources must be documented and reported on your 1040. If you're not sure what a 1040 form is, click the link you see on your screen for a short tutorial. So, we know military pay isn't affected by other income, but it is subject to income taxes in some states. To see which states currently tax military retirement pay, take a look at my video that explains progressive tax rates. Let's look at the other components of retirement pay now with your TSP. Service members who are aged 59 and a half or older can begin withdrawals from their TSP accounts without paying a penalty for early withdrawal. If you don't want or don't need your money right away, you can let it sit untouched. But when you hit the age of 72, the tax code requires that you start withdrawing a portion of your savings every month. This withdrawal provision is known as a required minimum distribution, or RMD. The actual amount of money you are required to withdraw is based on a life expectancy factor set by the IRS. Your RMD will vary year over year. You can estimate your RMD by calculating 4% of your TSP balance. Of course, if you want to take out more, you can always exceed your RMD. Now, on to the big question. Will I have to pay taxes on my TSP? And the answer is maybe. If you set up your TSP as a traditional account, then your distributions will be subject to income taxes at the time of withdrawal. The TSP will withhold 20% of your distributions for taxes up front, so you'll receive 80% of what's in your account. You'll have to pay any additional taxes due when you file your annual return. If you set up a TSP as a Roth account, the portion of your distributions from Roth funds will always be free of federal income tax. However, It's important to know that all matching dollars paid into your account by the service are always made as traditional TSP deposits. For details on how your actual withdrawals will break down, check your TSP account details online or talk to your payroll officer. And for a final bit of good news, your TSP withdrawals are not impacted by changes to your personal income or any other outside factors. So if you want to take a job in retirement, feel free to do so. It won't impact your TSP in the least. Lastly, let's look at how VA disability compensation can affect military retirement pay. This one is a bit more complex, but there are a few different angles you need to know about. First, if you have a service-related disability and receive VA compensation for that disability, your military retirement pay is reduced by the amount of disability money you receive. This reduction is known as a VA waiver because you waive your right to retired pay in order to receive the VA compensation. The VA waiver is created as a way to address double dipping laws that prohibit service members from receiving two government payments for the same event. Now, you're probably thinking that VA disability pay and retirement pay are not the same thing, and you're 100% right. But the law sees federal dollars as federal dollars, regardless of which payroll bucket they come out of. The major exception to this rule is for retirees who are granted concurrent receipt. Concurrent receipt ensures that retirees who are eligible for both a VA disability and retirement pay receive enough retirement pay to compensate them for their years of service. A service member who is medically retired from the military will have a high service disability rating, can receive extra pay under a couple of conditions. Retirees with 20 or more years of service and a VA rating of 50% or higher can receive their full retired pay under concurrent retirement and disability pay. Retirees with a combat-related disability as determined by their service may be granted Combat-Related Special Compensation, or CRSC. CRSC is separate from both VA retired pay and VA compensation. Retirees will continue to have their retirement pay reduced by a VA waiver, but CRSC will reimburse them for the amount of the VA waiver. VA disability benefits are typically tax-free, so they are not included in your gross income. And if you receive military retirement pay plus a VA disability, you may be subject to income tax on the retirement portion of your income. If you also take withdrawals from a traditional TSP or IRA, those dollars are generally also subject to federal withholding. Managing your finances after you retire from the military can require a bit of time and expertise. My advice regarding basic personal finance is always to follow the KISS principle. Keep it short and simple. Set up your retirement saving accounts as Roth accounts so that you don't have to deal with taxes when you hit retirement. Know how much you'll earn from your military retirement and build a financial plan that lets you live the life that you envision. Check your leave and earnings statements regularly and reach out to DFAS if you have questions about any of your deductions or disbursements. And if you need help setting up a budget, evaluating your investment options, making sure you have a solid tax strategy, and a solid financial plan in general, reach out to a financial planner at RINO INVEST Wealth Management. We are always proud to help a fellow service member get their finances on track. And until next time, this is Cassian Nuñez reminding you that it is always a good time to cash in with Cassian.